and then straight into it.
Sure.
Sean Peche has been guiding us, advising us, telling us to watch out for China. Well, my goodness, Sean, if you had a crystal ball, it certainly is one that you'd be wanting to consult continuously, given what happened in the last few weeks. There are a couple of issues, and maybe we start with the broader one. It appears now that those fears that you have articulated about China being a communist country and really attacking the capitalists there has accelerated beyond what anybody anticipated.
Alec, I think that's right. And I do think in fairness to the Chinese government, they have 1.4 billion people to look after. And so that has to take precedence, and they need to make sure that those people are housed, employed, fed, etc. And so that is their primary concern, and it just means that foreign shareholders are way down the list. And I think what we've seen recently is that they're able to take given the structure of the government, they're able to take very decisive action. And I think South Africa could have learned from that, given what we've seen in recent weeks. So I think they're just acting to support their population, and it just means that foreign shareholders get caught in the crossfire. And I think, I'm just delighted I'm not managing money in South Africa, because I've been talking about these risks for many years, and I probably wouldn't have had a job. I'd be out of a job. So sometimes these things happen, but the question is obviously what about now? What now?
Yeah.
Because okay.
Before we go there, though, this VIE structure, just repeat it again, because must be a year ago, you were telling us about the VIE ownership structure. I see last night our partners at the Financial Times, we run a little podcast from them in our program every evening. They focused on it, and their correspondent was saying the VIE structure is illegal in China. It's a big risk, which only now seems to be focused on. In the past, I was a Naspers shareholder, and I'd said, oh, no, come on, Sean, surely they're not going to do anything silly about it. Well, hello.
Well, yeah, actually, I wrote about it in 2018, and I remember that's when we first discussed it. It's amazing how quickly time passes. And essentially what it means is that foreign shareholders can't own direct stakes in Chinese companies. That's for Chinese people, and especially not in telecoms and sensitive IT-related issues. And so what the companies do then is they have a Cayman Islands company, which they set up. This is the norm. And that Cayman Islands company has a contract with the Chinese company. But the shares in the Chinese company, the actual operating entity, are owned in typically the founder's hands, okay? Which begs the question of what happens if one of them dies? And that's obviously a big risk. But in fact, in one of the recent, I think it was the DD 10 prospectus, they talk about one of the founders getting divorced, and then what happens to the shares in the underlying company. So there are all these contracts. So it really is a real issue. And so all that the Cayman Islands company has is a contract. And that contract, as Tencent have written about in their annual reports, and Alibaba in their annual reports, etc., is basically, at the whims of the Chinese government. And there's advice as to whether it's sustainable or not. And so, it's one of those risks that you see that hasn't manifested itself, but you could wake up tomorrow and it is a problem.
In other words, if the Chinese government decides that it really wants to put down the jackboot on a capitalist like Jack Ma, who might have been criticizing them, they could simply outlaw that VIE structure, and foreign shareholders would left with nothing.
Sure. What they do is they trap the cash in China. So I'm not sure that they would do that, but they do trap the cash in China. And so if you read the notes in Tencent's annual accounts, most of the cash is trapped. So all the profits are sit in China, and they can't, because of exchange control, pay them out to the Cayman Islands company anyway. And that's why many of these Chinese companies don't do share buybacks. Or if they do share buybacks, they're paltry, because there's so little cash outside the system. So in reality, nothing really has changed, because all cash is sitting in China. The shareholders owned in China, and it's just that if foreign shareholders don't really own anything, to be honest.
but Naspers did get $10 billion for 2 percentage points of Tencent.
Yeah, but they sold their Tencent shares, which is the Hong Kong entity. So it's a Hong Kong listing of a Cayman Islands company. Okay, so it's not, they didn't sell the underlying shares in the Chinese entity. It's the Cayman Islands entity, which is listed in Hong Kong, but the Cayman Islands entity only has a contract with the actual Tencent in China.
That's actually quite concerning. So what you're buying into when you buy shares in Hong Kong on the Hong Kong Stock Exchange in these companies is not the company itself, but a Cayman Islands entity, which then has a contract with the company. And if the government of China were to say that it no longer regards that contract as legal, which is what has been suggested quite a lot, then where is your security?
Well, no, there isn't any. And in fact, you can't even rely on corporate governance in the Cayman Islands, because I think I'm right in saying, well, certainly up to a couple of years ago, Baidu never held an annual general meeting. So, I mean, it really is, you just buying hope. So that's the worry. But I don't think, I mean, let's not get too scary about
it. It's a risk.
Look, it's a risk. But if I were if I were one of these CEOs, and I'm sure they've had these discussions, I'd sit down with the Chinese government and I'd say, look, let's actually look at what's happening here. We've got a profitable gaming company. We take those profits. We don't have to pay those foreign shareholders. We take those profits and we invest in startups, and those startups create jobs. And then what we do is we then go and list those startups overseas to all the gullible investors who, think that there's a lot of growth and want to give us a lot of money. And essentially what's happening is the foreign investors are funding the losses in these Chinese companies, but it's creating employment for China. I mean, you look at something like Moitong, that thing loses money. It's the largest food delivery business in the world. It's worth, even now, $270 billion or something, but it loses money. And now the government is saying, well, hang on, Moitong, you need to pay your drivers a minimum wage. And so who's funding those losses? Well, the foreign shareholders are funding the losses. So it's actually the foreign shareholders are funding jobs in China. So, does China really want to let the music stop? Probably not.
So this meeting last night, the secret meeting between the authorities in China and Wall Street banks, JP Morgan, Goldman Sachs, etc. On the one hand, it is insider trading, undoubtedly, because we've seen what's happened to the share prices. But leave that aside for the moment. On the other hand, is this part of not letting the music stop?
Probably. I mean, in reality, are they going to backpedal and say, don't worry, you don't have to pay a minimum wage. Don't worry, Tencent Music, you can keep going with your exclusive contracts? No way. They're not going to do that. They just want to try and calm the waters at the moment, I would guess.
So why would the Wall Street banks pile into Hong Kong shares as a consequence of that meeting? What might they have been told which would change their mind on that?
Well, I mean, the shares haven't recovered. I mean, they've recovered what? They haven't gone back to where they were.
Sure. About a third of their losses, yeah.
Yeah, a third of their losses. So, and remember that there's those Hong Kong banks and the Goldman Sachs and those guys have made an absolute fortune from listing all these entities in the States and from raising debt for the likes of Tencent. I mean, Tencent's got what, 40 something billion dollars of debt. And so there's an incentive for them to do that, and there's an incentive for the Chinese government to keep the music going, but only if it's not at the expense of their citizens. And I think that's the important point here, in that if you are making a lot of money in China and you're exploiting the citizens, as we've seen with this education situation, it's not going to be tolerated. And that's a problem. It's a problem for foreign shareholders because all of a sudden, the growth that you foresaw maybe isn't there. And you could wake up tomorrow and they've changed the gaming. I mean, a few years ago, they said there were limits in terms of how old the person was and how many hours they could spend in front of the computers playing games. And again, that's just looking after their population. So I can't criticize the Chinese government for doing what's best for their population. That's what governments are there for. But I think as foreign shareholders, you just need to know that you're not first in line.
It's an interesting point. Where do you draw the line, though? Where does, for instance, again, this morning in the Wall Street Journal, there's a story about a Mr. Sun, who is in a remote part of China, who's been standing up for local farmers. And because they don't like what he's been saying, he's been sentenced to 18 years in jail. So I hear what you say, that they're doing what they think is best for the citizens. But how's that best for the citizens?
I mean, I don't know the particulars of that case, Alec, and I think you've got to be, we could go down a rabbit hole here with human rights and all of that sort of stuff. I just think as foreign, if you want to bet on, I mean, look at Anglo-Americans' results today. If you want to bet on Chinese growth, do you really have to bet on a contract in a Cayman Islands company at 45 times earnings that can disappear tomorrow? That's the question I'd ask myself.
And got it. So there are easier ways of doing that.
There are easier ways to bet on it. Where you can actually get the dividends and you get the money and all the rest. You could buy it at 5 times earnings. Why do you have to go down this route? So, but because and look, it's appealing to investors because it's a big country with a huge population and they're growing, and so you can see there's this illusion of growth. But I think, and I think what's interesting is you look at it now and you go, well, yes, the Tencent went down from 770 to 492. At 770, everybody's focusing on Chinese growth, okay? And greed is let's think of the psychology now behind this share price. Greed is in charge. Everyone's wondering about how much money they're going to make, or dreaming about how much money they're going to make. All of a sudden, at 492, you're staring into the abyss and you're thinking, oh my goodness, I could lose everything here. I'd wake up tomorrow and VIE structures. And I mean, these risks have always been there. It's just that people haven't really focused on them. And so now all of a sudden you've got fear in charge. Now what's happened? You've seen huge volume go through in a lot of these international shares, and put yourself in the mindset of an analyst out there recommending stocks to portfolio managers. If you have now, this risk is visible, do you now ignore that risk and carry on and go back to where the share was? Because if you get it wrong, your clients are not going to be happy. I don't think you do. So I think psychologically the share is now damaged. The counters are damaged. And it's not going back to where it was. I can't see that happening because these risks are not going to go away. And it's not a disaster, though, because you're only back to where you were in, June last year? So it's no disaster. The Tencent even now, and I think if you'd ask the Naspers people, what's it worth? $600 billion now, and 30% call it 200 billion. If you'd said, Naspers way back when, your 25 million is going to be worth 200 billion, I think they'll take it. So you just got to be careful that you're anchoring from a behavioral finance perspective. You're not thinking of the top and saying, oh, I've given back all this gain. It's like, no, where's it come from? If it came from where it did to this point now and never went via the 770, would you be happy? And the answer surely has to be yes. Okay.
But you've outlined a situation where new risks have become part of the equation of analyzing or of looking at companies.
Yeah.
If the Chinese want to keep the music going, as you described it earlier, that's not going to remove that risk. And surely some investors are going to be looking at this and saying, hang on a minute, a little bit like the South African risk in KwaZulu-Natal, and I'd like to talk to you about that in a moment as well. But it's now on the table, and it can repeat, it can recur. And as much as you've taken a very rational approach to what the Chinese government has done, and Bob van Dijk of Naspers said exactly the same thing when I asked him the question. It was irrational. Yes, the government is entitled to do what they believe is right for their country. However, there is an undertone of nastiness. Jack Ma, Alipay, 2 days before it lists, you pull the listing. Didi, once it lists in New York, after the Americans have put their money in, then you start changing the rules and collapse the share price. It doesn't seem that it's rational on both sides.
Although in fairness, apparently they did warn Didi. Okay, but we'll have to see what happens there, because if I were one of those investors who just lost $4 billion, I'd be going after the investment banks right now and saying, well, how come this wasn't disclosed? And they haven't thrown Jack Ma in a Siberian prison, like the UCOS situation. I tweeted and did a LinkedIn post comparing the two last night. I think, though, that's the risks, but let's look at the opportunity. The game is up, because what was Tencent's business model? It was take your gaming money, put it into startups, list those entities in the States, and then, but when you invest in the startups advertise on your platform, you list in the States, you revalue your investment in these entities, you make a non-cash profit, and that's meaningful. I mean, in the first quarter, I think their gross profit was 60 billion renminbi, and other profit from other gains was 15. So it's not an insignificant number. Okay, now all of a sudden those share prices have all collapsed. So now you're going to have not other gains, you're going to have other losses, would be my bet. Okay, and so now that's going to detract. So all of a sudden you've now got 40. You're going to have a lower PE ratio because of the risks, on lower earnings because of all this unwinding, and you can't list any more things in the States where you get the best rating. So their business model is up.
Also, the fact that the Chinese government is using antitrust, or the focus on antitrust, to compress the profits of the Tencent and other. We talk about Tencent because it's so important in South Africa with the Naspers Prosus relationship. That must also dampen the prospects in the future. But what about Naspers Prosus? They've just spent, perhaps by now, we don't know exactly how much they've spent of the second $5 billion, but they've certainly spent more than $5 billion buying back their shares at much higher prices than the share price currently is.
I mean, it's a disaster. And that's what infuriated me a few years ago. And I'm not a Naspers or Prosus shareholder, is that they committed in 2017, I think it was, or 2018, they committed not to, 2018, not to sell any more shares. Remember, they sold this tranche of Tencent, and they committed not to sell any more for 3 years. Well, that 3 years is up, and then they sold another 3%. And they've again committed not to sell any more for another 3 years. And I'm going, well, why are you committing to these people? Because your responsibility is not to them, it's to your shareholders, okay? And so they've tied their own hands, unfortunately, behind the back. So the only option, and I don't know whether that's part of their commitment, is to unbundle the shares. But now you look at a situation, you go, well, hang on, all the shares are sitting in Prosus. If we unbundle the shares, they go back to Naspers. But they came from Naspers in the first place. And not only that, but people have taken they've paid capital gains on the whole Prosus transaction on 2 occasions, I think I'm right in saying. So it's a complete disaster. And then the problem is that if you then say, right, we're going to, because I did some calculations a while ago, and I think I'm right in saying if they sold, was it 10 or 20% of the daily volume in Tencent, it would take them 3 years to sell the Naspers shares, to sell the Tencent shares, sorry. And so if they unbundle the shares, well, what's the first thing that's going to happen? Everybody's going to go, well, we know that there's a huge overhang on the Tencent share price. So the Tencent share price is going to fall. So your discount might narrow, but the price falls anyway. And of course, then it's the reverse of a whole strategy, and there's the credibility issue and the costs and again, the capital gains that come with that. So, I wouldn't want to be in their shoes at all. But this is what happens when, you run your own show and you don't listen to shareholders. I'm afraid they've created their own bed.
Just to close off with the eye-opening in KwaZulu-Natal, where the police were absent while there were riots and looting. Businesses, many of them are going to close down as soon as if they get their insurance money, which is another big story, that Sasria doesn't have the money that everybody thought it had. So that province, as an investable area, I'd love to get your views on that, given that you are sitting in the UK and looking in from the outside.
I mean, it's very distressing, Alec, and one's always got to try and think of what's the positives. And I know there's lots of positives at the moment of the country rallying together and supporting and sending, support up to KwaZulu-Natal. And I think, what disappoints me, I think most, and I understand they're in a tricky position, is the decisive action that the government didn't take and the decisive comments that they didn't make. I mean, that would not have been permitted in China, let's be honest. And I think there's a lot of places, the whole world is competing for lots of capital right now. And if South Africa wants to attract capital, then they must be an investor-friendly place. And they are an investor-friendly place for the most part. We don't have Jack Ma's sitting in prison, unless, I mean, in fact, they're probably too friendly because people who should be in prison aren't in prison. And if you listen to what Neil Froneman says, we've got these huge resources underground, we've got these huge resources underground, and there's a massive opportunity, but it needs to be investor friendly, and that's how we create jobs. And so that's what the government must do. And hopefully this is, they need to make sure that this never happens again and ensure investors that this won't happen again, and be investor friendly, and then people will be happy to reinvest those proceeds and rebuild.
Come on, Sean. I mean, you've been standing by for 5 days. The government did nothing. How are they going to? They can say, "Oh, we next time it'll be different," but how's it going to be different? Who's going to believe them?
I mean, look, I understand that, but I don't really know what else to say. But that's the only thing that they can do, because they need to certainly, look at how they've responded, and it's been poor. It couldn't have been worse, really. It could not have been worse, because it wasn't looting by people who really needed it. You've seen all the images and that. And as you rightly say, if you're an investor or business person who spent your whole life building up a business only to have been ransacked over a weekend, are you really going to take your investment proceeds or your insurance proceeds and reinvest? That's a big call. So,
interesting point I was thinking about this morning. South Africans, 86% of South Africans claim to be Christians. And the whole Western civilization is based on the Judeo-Christian principle of the 10 Commandments. Yeah. So here we had people who were off there breaking commandment number 8, thou shalt not steal, and breaking commandment number 10, thou shalt not covet. And yet they're going to be going to church on Sunday, saying, well, what did I do wrong? I was entitled to it. And it does appear to me that there's such a disconnect between reality, hypocrisy, and what investors would be looking for in a investable area. And I'm talking specifically here about KwaZulu-Natal, which does have unique issues with the Zulu population, etc., and the political issues that go with it. But if you're sitting in London and you're looking at the whole world, isn't it Warren Buffett's view, kind of his file, which says just too tough to call, or no?
I think that's right. And I think these days, when money is so easily movable around the world, even to transfer, 10 years ago, if you wanted to transfer dollars to pounds in the UK, you pay a 3% spread. Now you pay 40 basis points. And that's for 60,000 pounds or whatever it is. So to move money around the world is the easiest thing to do these days, and I think that's the problem. What the government needs to do, though, because coming back to your point, yes, okay, so 86% are Christian, and all the faiths have similar principles. You've got to be really tough on the 5% who make it difficult for everybody else, just not negotiable tough, and come down on them so firmly. Because if you don't, all of a sudden, if I didn't loot, but the chap next door to me did, and he's got a big TV and I didn't, and I don't, what's going to happen next time? So he needs to be sitting in jail, and then there's a disincentive for me to go and try and get that TV. So you have to be really, really tough on the ones who don't comply, and that's all there really is to it. And the population need to feel that.
Just to close off with, expropriation of land without compensation. There are many who believe that's just theft. Because there is again, breaking another one of the 10 Commandments, because this is, many people have maybe inherited the farms, bought the farms, invested in the farms, and the whole undertone of the Western civilization is that if you work hard and you sacrifice and you build something, you protect it from that being removed from your possession. That's why you work hard and sacrifice and build things to grow society. How big a deal is expropriation without compensation in investors' minds, or is it like that VIE with China, not even being looked at now?
I think property rights are absolutely fundamental, because without that, you don't have confidence in the future to invest. And doesn't the government in South Africa own 80% of the land anyway? Do they really need to go and steal it or take it off farmers who have productive farms? Because there's not a lot of great case studies around the world where that's been a great strategy. And if you're thinking about what's best for your population, if you have a population who's starving, you've got a real problem. So don't take away the productive farms. Give them the land that the government owns anyway that is currently unproductive.
Now, I get that, but how do the investors feel about this? Or do they even bother to concern themselves with expropriation of land without compensation, given that it is the ANC's policy? It is something that they're trying to push through Parliament at the moment with the support of the EFF, although that thankfully seems to be a little bit dodgy.
Well, I mean, I think it comes back to, well, if they take my land, what about my retirement savings? What about my house and my assets? Where does it stop? So of course it would be, and that's why is America, why is the US such an amazing place to be an investor, and why is the stock market 65% of the global index right now? Because it creates the entrepreneurial nature, because property rights are protected, because there's not a huge, there's less regulation than elsewhere, and so you just let those entrepreneurial spirits run wild. And when people make a lot of money, you're not going to take it off them. And now you've got,
And they create jobs, and then people are employed.
Totally. And I mean, you look at, you've mentioned the energy drinks chap and Elon Musk, and South Africa is huge, lots of success. I mean, you've got Anglo-American and all these amazing businesses over here. So there's the entrepreneurial spirit in South Africa, and we just got to make sure that is fostered in South Africa, but property rights is essential. And why do you have a situation where half of people's classes are sitting offshore? So anyway.